The Straits Times REIT index is down almost 20% year to date on the back of the COVID-19 pandemic. Sector was hit hard due to broad-based, indiscriminate selling, further triggered by margin calls from private banks. That said, we maintain a positive long-term view on the sector and believe this presents a good opportunity to buy into selective high-quality names. The hospitality sector has been the hardest hit by the COVID-19 crisis. Already, we have seen global travel grind to a standstill due to lockdowns and fear of the virus itself. This will put downward pressure on RevPAR and earnings over the next 12 to 18 months. Similarly, the retail sector is experiencing low footfall and declining sales due to circuit breaker measures in Singapore. However, we expect a meaningful rebound once threats of the virus subsides. Shopping is an essential part of Singaporeans' life after all. We anticipate earnings to gradually improve and normalize by 2021. We see minimal impact on the office and industrial sectors, as tenants typically take a longer-term view in terms of leasing demand. While rental reversion could be more subdued in 2020, we expect earnings to be broadly stable even during this period. In fact, the industrial sector could be a beneficiary, with demand for data centers and logistics space arising as we spend more time online during this lockdown period. There is no doubt that the world is entering into a recession, but thankfully, many governments are rolling out aggressive policies worth trillions to mitigate the impact of COVID-19. In Singapore, the government has committed to spend almost $60 billion to engineer a softer landing for the economy. Central banks are also doing their part by ensuring ample liquidity in the system through aggressive rate cuts. After the recent correction, we believe that the S-REIT valuation is attractive relative to history and to spread versus the US Treasury. We expect investors' interest in the sector to pick up once macro conditions improve. Within the sector, we have a strong preference for names with high-quality portfolios and the ability to grow earnings organically and through acquisitions.